The AI boom feels completely unstoppable. But a single comment from OpenAI's finance chief just sent these massive shockwaves through the market, and it revealed a huge puzzle right at the heart of this revolution. So how is a company that's not even profitable planning to pay for the future of artificial intelligence? Well, let's try and unravel this puzzle together.
To really get the scale of this, we have to start with this number, $1.4 trillion. I mean, that's more than the entire GDP of Australia. It's the value of the infrastructure commitments OpenAI has signed in just the last few months. And you guessed it, it's what's causing all this anxiety.
And this is the comment that kicked the whole thing off. At a Wall Street Journal event, OpenAI's CFO, Sarah Friar, just casually dropped this bombshell, the idea of a government backstop for chip investment. Now, she walked it back pretty fast, but the cat was already out of the bag. It made everyone ask, is OpenAI's financial plan so fragile that it might actually need a taxpayer-funded safety net?
So here's how we're going to break this all down. First, we're going to look at the sheer scale of this $1.4 trillion problem. Then, we'll dive into OpenAI's, let's call it creative, maybe even surreal, financing methods. We'll also touch on the real-world constraints of building an AI power grid, the company's national security pitch to Washington, and then finally, we'll ask the big one, is this whole thing just a giant AI bubble? Okay, so this brings us right to the central paradox at the heart of OpenAI. You've got a company making these absolutely historic spending commitments on one hand, and on the other, it's a company that is just burning through cash at an incredible rate. So how can those two things possibly exist at the same time?
The reason for this insane spending spree is something OpenAI calls being compute constrained. It's a fancy term, but it basically means they literally don't have enough processing power to launch their new models. A perfect example is Sora 2, their video generation model. It was reportedly ready to go for a full 6 to 7 months before they had the compute power to actually release it. And in the tech world, that is an eternity.
But here's the kicker. While their ambitions are just soaring, their finances are absolutely plummeting. According to Microsoft's own earnings filings, OpenAI lost a staggering $11.5 billion in a single quarter. That's its worst on record. So let that sink in. They need to spend trillions to solve their compute problem, but they're already losing billions.
All right, so with a trillion-dollar problem and billions in losses, how in the world do you possibly bridge that gap? Well, this is where OpenAI gets creative. They're trying to reinvent finance itself just to build the future.
OpenAI CFO, she doesn't see this as a problem. She proudly calls their approach massive innovation. You gotta love it. It's such a classic Silicon Valley move, right? Frame a really desperate situation as some kind of groundbreaking strategy. So let's take a look at what that innovation actually looks like.
Okay, let's walk through their deal with the chipmaker AMD. Step 1. OpenAI commits to buying a ton of AMD's chips. In return, Step 2, AMD gives them warrants. Now that's basically the right to buy a huge chunk of their stock for pennies. This could unlock, Step 3, a potential $100 billion windfall for OpenAI. But, and this is the crucial fourth step, here's the catch. To get that money, OpenAI has to spend an estimated $300 billion on infrastructure. Just think about that. To get $100 billion, they have to spend $300 billion. It's wild.
And this just brilliantly illustrates the scale of the problem. Even if you combine that potential value from the AMD deal with a similar $100 billion pledge from Nvidia, they've only accounted for about $200 billion. That still leaves a funding shortfall of $1.2 trillion.
And underpinning all of this is a really fundamental business problem, negative unit economics. It's a fancy way of saying they lose money on every single user. See, unlike traditional software where your costs are basically fixed, with AI, the costs rise almost directly with usage. So more users actually means bigger losses. It's that classic startup problem. We lose a little money on every sale, but we'll make it up in volume.
But hey, let's just imagine for a second they solve the money problem. Let's say $1 trillion just magically appears. Well, they would immediately run into another, much bigger wall, the real world. We're talking about power and land and concrete on a scale we've never seen before.
For years, we've all been sold this idea of the cloud, right? This sort of ethereal, weightless thing where data just floats around in the ether. It was a really powerful and clean metaphor for the digital age.
The reality? Oh, it's anything but. These new AI data centers require more concrete, more copper, and way more electricity than the steel mills of the Industrial Revolution. The clean, weightless digital world, it turns out, has a very, very dirty and very heavy physical footprint.
Let's really put this in perspective. Just one of OpenAI's planned projects, this thing called Stargate, is projected to need 10 gigawatts of power. Now, a typical nuclear power plant generates about 1 gigawatt. That means a single AI project requires the power of 10 nuclear reactors. And that's just one project from one company. It's just mind-blowing.
So with these mind-boggling financial and physical hurdles, how does OpenAI even hope to get the support it needs? Well, they're turning to Washington, and they're playing their most powerful card, national security.
Their pitch to the government is actually pretty simple, but it's powerful. AI is a national strategic asset, and it's essential for competing with China. They're lobbying like crazy for subsidies to cover the entire supply chain, and they're comparing this moment to the Manhattan Project in the space race. In short, they're framing AI as something that is simply too important to fail.
And this brings us to that final critical question. When you see these kinds of circular financing deals, astronomical spending, and pitches about saving the nation, you have to ask, are we living through a historic technological revolution, or are we just watching another speculative bubble inflate right in front of our eyes? Analyst Paul Kudrowski actually has a term for this, a metabubble. And it's not just tech hype or real estate speculation on its own. It's the dangerous combination of all of it. You've got the hype, the land rush for data centers, easy credit, and this looming possibility of a government backstop. All the classic ingredients for a bubble are right there.
And the data is, well, it's concerning. If you look at the S&P 500's total value as a percentage of the US GDP, which is a key bubble metric, we are significantly higher today than we were at the absolute peak of the dot-com bubble in the year 2000. By that measure, the market is way frothier now than it was back then.
But is it a perfect comparison? I mean, the "it's different this time" argument is also pretty compelling. Unlike the unprofitable startups of the dot-com era, today's tech giants, we're talking Microsoft, Google, Amazon, they have incredibly profitable core businesses. They can actually afford to lose these AI bets.
The stakes, however, are so much higher for everyone else. When the dot-com bubble burst, tech stocks lost 76% of their value. A similar crash today, according to The Economist, could wipe out 8% of U.S. household wealth. And why is that? Because unlike 25 years ago, the stock market isn't just for Wall Street anymore. It's in the retirement accounts of ordinary Americans everywhere.
But at the end of the day, it all comes back to this one fundamental problem. The chips that cost billions today will be basically obsolete in 18 months. Every new breakthrough makes yesterday's massive investment worthless. And it raises this terrifying question for lenders: why would you ever finance an asset that depreciates faster than a news cycle? So OpenAI and the entire AI ecosystem are making this incredible bet on limitless capital and infinite growth. And for now, the music is still playing. But we're all left with this trillion-dollar question: what happens when it finally stops?